Okay, quick look through the markets. Apologies up front first because I've got a bit of a cough and I've got a migraine coming on, so I've got a little bit of double vision. If anyone's, it's pretty quiet out there obviously today, but I've got a few questions from my chat group and I've got a few things written down what I want to look at and go through. But if anyone's got anything they want to sort of touch upon, look at, whatever, I think you can drop it in the YouTube feed and I will see it, I promise. In the past I've missed them, but I will keep popping back so I can see that. So I just thought I'd just buzz through a few markets today. Got a few questions. First thing I want to do is just zoom this out. Let's get onto the meaningful sort of time frame. I'll just mute that other computer. So let's talk sort of different methodologies here. You know, obviously a lot of the stuff I share is position trading. Basically, think of it as riding the clean up trends in a stock. I know I've got the markets up here. And I'm also a swings trader, which think of that as riding I like to buy pullbacks in swing trades. So think of that as, a pullback in a stock, just riding the upswing rather than holding it through all the volatility of the pullbacks on the longer term sort of hold. Now, that's the main thing I share in Trading Bases. Obviously, that's most people who come to me are looking at stocks. They're looking at growth stocks, especially, the W7s, the GORs, whatever, the growth stock of the time. And, we're all over that at my site. But let's just zoom out from that a bit more, because I'll talk about sort of the breakdown of my own sort of portfolio. As many people who know me well sort of, this is a portion of my, investment pot. What goes into those? I have a pot what's obviously for investing in stocks. It's more active, and out of that pot, say that pot, the 100% of that pot, I tend to go 2/3 trend, 1/3 swing. And I only tend to need that 1/3 swing, and I can use a margin account for it as well. And sometimes I'll steal off the swing portion for trends. If the trends are just fantastic and I need to add to something, I will steal from that pot a little bit. But that's the way I break it down. Then another pot is obviously the pension pot, and I DCA a pension, so dollar cost average a pension. So with that in mind, I just, this is for the long-term investors. Oh, crikey, I've got a problem with the share scope charts here. For the long-term investors, I've seen in the past people saying, oh, good time to sort of don't put any money in that you'll get a better opportunity in the future. And I just want to basically, go back to that big time frame for those people who, pretty sure everyone who trades actively will also have a pension pot they're dollar cost averaging into. This is what turbo boosts that longer term investment. And the way I do it is when the market goes into correction, I double up on my payments. So just sharing what I do there. If you backtest that in a bad market environment, you could say, well, double up when we're under the 50 month and see how that works out, and then go back to normal payments when you're back up, you're back up near highs on a monthly basis. So mine goes in on a monthly basis. I can double up on it for the next, until it basically gets back above the area. So obviously we're not below it yet on the S&P, but you'll notice we'll be below it on. We're looking at the strongest market here for an obvious reason as well. Go to the ShareScope articles where I talk about these things. Go to the one what we sort of drew this circle here back in 2022. Yeah, always watch the strongest. I know it's common for people to say, told you that the Russell was leading the markets lower. The Russell is the weakest market. It should fall, lower. The trouble with that is every twitch of the Russell, you end up in cash, don't you? So from my point of view, I always watch the strongest markets. This is how I do it. So that's the first thing. You've got time on your side if you're young, especially, and you're decent. It's not a time to be scared. It's a time to be excited, really. It's like a nervous excitement you get. It's horrible watching your unrealized gains and turning back into small losses or whatever. But the only thing we've got to avoid is big losses. There shouldn't be any big losses, and there's two ways of that on a stock per stock basis. There shouldn't be any big losses, but also on a portfolio level, that will be too many paper cuts, taking on too much risk, and the basically all those stocks together turning into a big loss. We call it, the unrealized is risk to stop. The actual heat against the closed balance, the actual risk against the closed balance of a portfolio, we call it heat. We can decide how deep the drawdown is we expose our portfolio to. Now, I've shared something, the index trend model, and that's been running at sort of 50%, and then it's come down from being pretty bullish, and it's just stepped lower over the last 8 weeks. And that means that in my own account, I cannot go into a drawdown of more than 5% because I trade within those risk parameters. It's the number one the cornerstone of having money in the markets. It's different to the investment. The investment goes in on a monthly basis, doesn't it? For me it does. That just ticks away, and I can turn up the payments when the market comes down into some big, we call it big picture levels, or so moving on to the sort of markets, this is the 50-month. This is what we should be watching. We've got a level here. We've got a level here as well, around 4,800 as well. But I'll try not to get too off piece, but I know a lot of people will be drawing stuff like this and going, that's support and that's support, and it's what was really support was that this level here when the market pulled into there and it found support, and what was really support was this level here when the market pulled into here. When the market's rolled over, these are just they're kind of meaningless levels. Go to the last big level, and that's the first. What's that off highs? 20% off highs. Is this guy crazy? No, that's the first level where the big gun sort of support is, and that's the 50-month average. So I'm pretty sure it's there in the pre-market anyway, in the futures, but in the after hours, pretty sure we're down there on the S&P. But yeah, that's the first level. There is no support before that. Same went for when we drew this level. I know everyone sort of gets bent up, but these are meaningless. Zoom it out, have a look on a monthly chart. If you can't see it on a monthly chart, it's not there. This one was there. That's why it came into this little zone, and the 50-month saved it again. So yeah, don't get, hopes and dreams on stuff like this, secondary trends sort of. Let's look at the big levels, and that we can back our psychology into that. We expect it to go there. You know, you certainly don't expect it to go there when the market's up here. We built all these bear flags, and we drew all these bear flags in the market, and we said, well, they look like bear flags. The index trend model is 50% bullish, but they look like bear flags, and then yeah, they were bear flags. So it doesn't always happen like that. Sometimes they look like bear flags, and it just goes straight back up. So you know we don't have any magic. I'll just show you that here. We don't have any magic. They look like bear flags at a little dip, and then off it went on its journey again. So yeah, just tune out, put a monthly or at least a weekly chart on, and basically just if you expect that area to sort of post, you can sort of do something about your risk management, can't you? You can go, well, I think I've got too much heat on it. If it's going there, it's going to be quite painful for and then you'll probably start to look at risk management the way we look at it. It never feels good. The worst thing is, that the unreal, the all-time high to sort of stops, all that unrealized profit, it doesn't, AMP had a huge profit on the table for me, and it just evaporated. But that's what it's going to do. It's better evaporating unrealized gains than actually going into a hole. Another thing I'll talk about, when I step up to the setups, what start to fire off from this pullback correction, a lot of people go trade half the size. Now, let's just say you're 5R in a hole, and then you're only taking your mother of all setups, your best setups, but you half your size. That 5R hole is now 10R. So I don't do that. I make sure before I get in the hole, I'm happy with how deep the hole is, how much heat I risk in the markets. I'm happy with that. I don't want to go and pick up a smaller shovel and start trying to dig myself out with a smaller shovel. It's like, you're substituting a shovel for a spoon to try and, trade your way out of that hole. Yeah, if you're trading too big and you're just basically not abiding by any of your rules, what you've sort of back tested, and yeah, trading too big, you have to adjust, don't you? But you kind of learn this lesson once, and then you start trading within your own. It's a sliding scale. It's different for everyone. So we don't need to know where this market's going. We know there's a big area here. I know everyone's going to be uber bearish here. My GTRS was trading some pretty awful levels, what we haven't seen since the pandemic, really. I mean, the bear market was, and it was a bear market, 25% or something plus. It's actually easier dealing with a pandemic or a really fast sort of liquidation event than a drawn out bear market. It's plain to see that we've got a fast event playing out at the moment, but it doesn't make we don't know we don't need to know, is what I'm trying to say. We just don't need to know what's going to happen in the future. All we need to do is manage our own risk within our own risk tolerances, so we can do business and step up when we need to step up. What it's easy to do is form an opinion on the market and get uber bearish on the lows, and the only reason you will be bearish is because you've got losses. It's better to just not be opinionated on these things. Nobody cares if you call the level right, or you've been shouting and screaming about the market liquidation event for months on end, and then it finally, nobody cares. In the real world, it's about, can we do business in the markets without basically going on an emotional roller coaster, isn't it? That's the the simple sort of thing what we've got to do here. So yeah, I mean, I'm not going to go through all the markets, but it's a pretty big level there to look at, isn't there? That would be my first level of interest. If it doesn't respect, and it's only an area, if it doesn't respect this area, I've just thrown in, this is the big pandemic trend line. I've just thrown this in for those who get bent up on these diagonals. You don't see them on my charts very often, but I was just looking for a next area of interest after this area. Now, when you draw these big trend lines off the lows, just make sure you use the log scale and not the linear chart, because the linear chart is pretty meaningless. Put your log scale on and just zoom it out and just say, wow, yeah, realistically, if it doesn't respect here and it goes lower, it's probably just going to do some horrible wide and loose action in this area here, isn't it? But I'd be very surprised. The market doesn't care what we think. The market doesn't really care about anyone's opinions out there. At the end of the day, the market is basically all the news, all the tariff mess and everything else is just boiled down into the markets. And the market is basically, they call it a voting machine, don't they? Basically everything is in there. All the emotional trading, everything is in this market price action. And at the end of the day, it's going to shake as much as it's going to shake. It's going to shake like a dog with fleas. It's going to shake everyone out. And, those with risk management are going to just be basically exiting their positions in an orderly fashion. Those longer term investors, they've got they're on a different time frame. That's the dollar cost averaging, as I said, that works for different reasons. They soak up all these sort of this is a gift for dollar cost averaging. It always will be. Individual stocks, I'm not a great fan of doing that myself, but if you're a fund investor or you just DC, a managed pension, yeah, happy days. Fill your boots. So that's enough on that. Just talking about risk and that. I've got a few questions on sort of exiting sort of trades. Also a few questions, gold and stuff like that. Should we just go through the markets later, and I'll just jump on exiting positions. So a couple of the biggest leaders for us, the most obvious ones we rode as a group. I think most of us were in this at my group, and AT, obviously. AT went a long time ago. Let's just talk about exiting. And just got a question of Colin about exiting. Should I show it on W7 because it's a more volatile exit? I think I should. So for anyone who's, check the log scales on again. For anyone who was exiting W7, this was a huge trend, wasn't it? It was an outlier. It was a massive profit for us. Even the most fumbled exit was still a really good compounder. So first things first is just, if you've got a stop, let's just say your end of day stop was here. and you know, end of day closed down here. The question is, how do you deal with this the next day? Well, if it's in a liquid stock, you know, thin small cap, you know, the end of day, as you'll see, a lot of the time they can just go through, all the intraday stops are hit, and then they close back up here, and we call it a hammer. It happens a lot. One thing I'll say first is if you're using an end of day stop and it's a very tight position, maybe you want to sort of think about either loosening your. I trade looser positions on small cap stocks, so slippage is not, you know, it doesn't affect me. But if you've rode an outlier, that stock's going to become more liquid on the journey. But just say you've got a big outlier and the stock's still very illiquid and trades very thinly. You're probably going to have to be a little bit more proactive how you exit that. And the way I would probably approach it is I would probably split it into two orders. I'd put a live in the market order and an end of day order. So you're half wrong, half right, however you do it. You know, or if it's a huge winner and basically, you know, you can take some off the table, can't you? So you know, you can turn down the volatility on your correct stop area. So that's something to think about as well. But you know, W7 being a very volatile sort of exit. If my stop was end of day on this day here, I would just put my order in the pre-market. That's it. Nothing to do. Just let it go through. Walk away. If I didn't have my order in the pre-market for whatever reason, couldn't get in the account or whatever, another way to do that is let the opening range post. Now, this is going to be useless on a thin trading stock, but on a liquidation day or whatever, on a thin trading stock, I'm going to just quickly dash off piste again here. You know, the most common thing I see is, yeah, you can't sell on a profit warning. It's actually the easiest time to sell. More volume, not, you know, this is just a breaking trend, but more volume is traded on these 2 days here than forever and a day. It's the easiest time to sell. There's lots of people, there's a buy for every sell. It's just you don't get, you know, you get slippage is part of the game, isn't it? You know, it's going to happen. But, you know, profit warning days are the easiest days to throw out a big order because they're the most liquid days. The most, you know, they find a level where the stocks can trade all these shares. So throw that out the window. That's just an excuse what people use. You know, market makers against me and all that kind of stuff, you know. It's always someone else's fault, isn't it? No, yeah. Let's jump onto the markets and I'll just show you the other way of approaching this. So let's just say you know, this was W7. Your order to exit was a close below here. Order to exit. I've got to exit the next day. Order in the market, you know, you're out in the pre-market, you're out. That's it. Close the trade, give it a little clap, compound that profit or that loss, whatever it is. Delete from screen. Don't sit watching it. You know, there's no point. You know, it's broken trend. It doesn't matter where it goes anymore. You know, and but say you didn't have your order in the market, you know, sometimes you just forget. I'll tell you what, I sometimes forget to do things, and being dyslexic as well, sometimes I just do things wrong. Let the opening range post. So I've got the 30-minute opening range up here. That's a pretty good one for me. So those white lines are the 30-minute. You can't do this on SharePad. I hope they add it in the future. This is something they programmed for me many years ago. But you know, this is a vital part of trading stocks, the opening range, and so hopefully they can add it at some point in the future. But yeah, just let the range post 30 minutes. That range is going to be as big as the volatility of that stock in 30 minutes. This is going to work better in liquid stocks. In illiquid stocks, you know, the spread could be wider than the opening range on a liquid stock. So in liquid stocks, especially a day like today, if it's slipped your stop area and it's bounced on the opening range, you know, there's no harm in just putting your. This is how I would do it. I'd just put my exit stop. I'd just put it in the market there. If it bounces, it goes up all the way back, closes the gap, you know, messes around for the next few days, does a bit of this, you know, with back to highs, and then does a bit of back and fill. Then all of a sudden that was the low. Well, the opening range stops kept your stock in the game, hasn't it? And once you've got enough cushion on that, you could just put it back into the correct area. Say it just went off on a journey up here, you could go, right, get my stop back in the market where it should be here, you know. So that's the way I would approach it, especially on a liquid product. On a liquid, you've got to deal with wider ranges, and you've got to deal with. It's just better to put it in the pre-market, I would say. On end of day stop, there's better things to be doing than watching price action go up and down and wondering whether you're, you know, if it trades your exit, you know, that's what your position sizing as you know, you're backed into your risk, and that's where your risk is. Or if it's a trailing stop as W7, it's locking profit plus or minus slippage, you know, just make it as easy as possible. You know, scratching around for pennies around your exit is not what makes you profitable. What makes you profitable is riding the big trend for the position trader. So yeah, that's something to think about there. Just while we're on these, you know, these outliers kind of rolled over, and you know, AT, I know I had to close AT because when my dad died, but for those of you who were sort of in AT, that one rolled over, this one rolled over. It put a lot of cash on the account, didn't it? And then lots of opportunity out there in pullbacks, but not so many breakouts. We haven't seen so many breakouts in really good growth stocks. And you know, it doesn't mean just because the outliers have rolled over that the market is going to hell again. But sometimes it just, you know, basically you get that rotation. Sometimes you get a market rug pull, and then you see the broader rotation. You know, it's another of those things. It's kind of crystal ball business, isn't it? Just to think because the outliers have rolled over and you've got a lot of cash that the market, you know, is over. But you know, the trend models I run, they kind of look like they look like we could just trade off them, don't they, at the moment? You know, when they get to 100% bullish, they put the markets put the top in, and when it's been down in the, can I bring that over? I'll share these as well today. There's not many people around at the moment, but I'll just bring over my market technicals so you can have a quick look at that as well. So I've actually dropped this in the on the Trading Basis site. I've shared it on the if you go to Trading Basis into the articles, if you just go down into articles and tutorials, and navigating market meltdowns. You can just see the ones as the index trend model came down, and then I've just dropped a couple of charts with some big levels here as well. So yeah, it's easy to think that we've got the keys to the kingdom here, and it certainly has been trading like that. This was the pandemic lows, this was the bear market lows, and we got that bounce in the large caps, didn't we? And it was just kind of into. We were very wary of that one because of certain things, technicals out there and things I follow. But we got the real low, and then we did all this kind of business, didn't we, before getting to highs, and a lot of money's made in this, even though it doesn't look great. A lot of money's made in this area. Yeah, we're heading down to the lows again. We're running out of sort of bullish stocks. They're all getting whacked together. Everything, correlations go to one. Everything gets whacked together. This, I say this all the time. When you kind of run out of ideas, you go. I always say in my screening sessions, it's not going to feel good, but a real good market rug pull would just be fantastic. And we were saying it coming up to the pandemic as well, because but still, it always, you always give back the tail. There is no key to the kingdom in this sort of stuff. You always got to give back the tail. If you're just doing what I did back before the GFC, I closed all my accounts down because I was going traveling, on the back of my dad sort of basically closing down his and making a big market call, and he did nail it. And yeah, that happens. But what I do here, I'm trading stocks in more active now, so I don't get the job is to turn up, isn't it, every day once you're in front of the screens. So yeah, we're heading down there into the doom and gloom area again. It's going to be, it really is a gift going forward, this, but it doesn't feel good in the present, I suppose is the best way of putting it. So that stops. What else did we have to talk about? There was something else, wasn't there? I'm going to have a look through the yeah, Nigel saying he lost a couple of. Yeah, I've just been doing that on the sort of accounts this morning. Few swings, what got whacked. Fantastic swing period, and then yeah, the last ones have just been whacked, haven't they? Dangle some toes. Actually working out pretty well, but a liquidation event. I've still got a few swings. What are in the game? They haven't got much heat on the account, but yeah, they all got whacked together. Gold stocks. Let's have a look through those. That was the next request, wasn't it? So I'll just bring over my screener again, and you'll see that Fresnillo, SRB, GFM, going MTL. What else have we got in here? THX, ALTN. A lot of gold stocks. Basically, what we've been looking at is gold stocks in the top end of the GTRS recently. And pharmaceutical stocks were acting really well just recently, but they've all been whacked together now, haven't they? But let's just, can I go through those stocks? I'll tell you what I'll do. I'll just hit the, let's just see what's still bullish in the 350 trend model, and I'll change the list. to the GTRS list. Primary trend bullish UK. There's only 200 odd primary trend bullish UK stocks, and obviously there's a big chunk. There's probably 40 investment trusts in this list as well. But I'm just gonna buzz through these. You can't see what's in the sectors, but I'm going to tell you. Financials, aerospace. It's been running forever and a day, hasn't it? In fact, you know, when this gapped up, I'm doing the exact thing I hate, but you know, when the news comes, money's going into aerospace, but money's been going into aerospace for the last defense, sorry, going into defense stocks for the last 25, 26 months or whatever, more than that. And then they come out and say, yeah, it's about defense stocks. This is call me cynical, but this is the area where I turn up and I say it wouldn't surprise me if this is the top, or at least an interim top. And lo and behold, it's like, oh, it's you just got to remember, if you're getting your ideas off news feeds or even off popular FinTwit accounts or whatever, they're going to be talking about what's happened usually. When people write articles about stocks, they always write about stocks what will get clicks, and yeah, I mean, it doesn't mean it's not going to continue and still go on another move, but it just means that what I'm trying to get across is, why are you looking here when it broke out here? And this is where the investor, not only should the trend follower be getting involved here, and the more nimble momentum trader will be getting involved in this early aggressive trend. The long-term investor, contrarian, taking positions. I'll just zoom this out and sort of get this across to you. I'll try and zoom this out. ShareScope doesn't like me doing this anymore. This is not contrarian investing, buying things what are just getting whacked today, and you know what I mean. This is not contrarian in any kind of way. This is contrarian. This thing has been in a downtrend for how long? It started to base out. It started to coil up. This is contrarian, getting involved as it breaks out. The high turns out to be the low. W7, Gore, name your stock, boo. It's not contrarian to buy, and you're not buying value when you're just buying a stock what's getting whacked for, after the move. It's about riding the move. Think Fever Tree as well. It's about catching the move. Whether you're a long-term investor or position trader like me, I'm as long-term as the trend lets me be long-term. But one thing you do start to get is you will start to get, sounding like I'm contradicting myself now, but you will start to get some stocks what have only just started on the journey. They've got growth. They're in the foothills of their growth cycle, what are getting whacked. And it's, we're in an environment where you will start to see growth stocks trading at valuations for the value guys. It's a very rare thing to pick up good stocks at value. There's a reason, good stocks never trade at value. Very rarely. Apart from pandemics and real market rug pulls. So if you're getting a stock at value, it's because it's basically out of favour. how did I put it the other day? And it's probably on the beginning journey lower, is, you know, the end of the growth cycle. Looks like value until the results drop, and then it looks overvalued again. Do you know what I mean? But yeah, so you will start to find stocks. I mean, one what was passing for us. I mean, HLN. Let me just punch it in because I might be just. You know, not a great example. I'll try and find something else. As I go through them, I'll try and find something else. But you know what I mean? Stuff what's emerging. I mean, this was our sort of entry on this one, and I had another nibble at it, and it stopped me out today for the second half. But I nibbled at it here actually, and it stopped me on the first half, and then the second half's gone today. I think it's gone today. I know I closed a lot, but trying to. I'll just go down the list and we'll see what we can find. Actually, it's the best way of doing it, isn't it? So this is the list of still bullish stocks. You will see destruction in this list by the end of day, though. You know, the end of day will be a different list again. So over and over again, you know, I'm not interested in buying stuff like that. You know, what's after the trend, it's, you know, even if I bought it here and I nailed it, it would be a volatile journey going forward. I'm interested in buying stuff like this. You know, what the market does. This is, you know, what this market does this to the stock. And, you know, looking for strength into big levels. This is where, as an investor, a longer term investor, this is where, and a trend follower as I am as well, this is where you're going to find your opportunity. Not here at the tail end after the trend. All the value signs will be flashing green and everything like that. Here, you know, you're not going to get that same, you're not going to get as cheap a valuation, but it's trading towards its growth cycle. If you pick 20 of these, you'll lose money hand over fist. If you pick 20 of these, you'll make money hand over fist. I think I said overvalued, you know, replace that for sought after. Undervalued, replace that for out of favor, you know, whatever. It's also going to be extremely interesting to see how, you know what I'm like with themes. I just yawn when I hear a theme. There's always a theme. But it'll be interesting to see how stocks actually start. You know, you're going to see if the stocks are using AI and it's really improving their sort of business, you're going to see it in the same numbers any investor or growth investor or whatever is following, looking at. You know, you're going to see it. You know, you will see it in the numbers. They will be screaming out, you know, the turnovers, as the turnover was on Nvidia before it made its huge move. You know, they will be screaming at you. You know, you want growth what's fueled by turnover. I'm just going to fly through these, and then we'll have a look. We'll find the gold stocks as we go along. Just let me get past these investment trusts. Yeah, same the construction stocks. You know, this is where we focus on these things. You know, this is where you find your sort of longer term hold entries. SRC, working on a hammer today. I've got a skin in the game on this one. Skin in the game. It hasn't even taken off really. We can go back to the pandemic for this. It's a sloth. It is a sloth. But I bought after the pandemic. This one went straight back to highs, and I bought the first retrace here, and I added to it here and here on the journey. I didn't add as very aggressively there though. I was quite loose on it. So I was quite loose on it when I added here, but I just nipped it up a bit tighter when I added there. Off memory. Don't quote me on that. Off memory. But yeah, you know, you got to remember what the pandemic was doing, and you know, the stocks what went straight back to highs. They were the ones what offered the, you know, the best entries. The ones what sold off the most. Yeah, there were volatile swings, you know, which is great if you're an intraday trader, but as a longer term holder, they just basically went volatile for long periods of time without even basically getting anywhere. Not my way or the highway, obviously. Yeah, obviously the utilities pop into a little bit of turmoil, don't they? But then they always end up, you know, they end up the same. AAZ there, you know, working on a hammer today. I've got no forward numbers on this one to form an opinion on it, but there's a lot of other gold stocks out there. They have been running for a long time though. Griffin working on a hammer today as well. Yeah, I skin in the game on this one. Zooming out as well. MTL skin in the game again, working on a hammer today. It's what you'd expect to see somewhere around this area. You know, they all get whacked together, and then the ones what have a reason keep going higher, all of a sudden you start to see swing points on them and reversals from normal areas. Let's do a few more. Same. You know, we rode. I mean, I could have squeezed some more juice out of this one. I got another signal on it as well, but it was still a good trade for me. But yeah, JLP as well. Go and have a look at JLP. That, you know, we just rotated out of those stocks and into new stocks, and these light up on the, you know, after the fact, once those forward numbers are posted, what we traded towards. The market's forward looking, stocks are forward looking. You saw a lot of investors turning up and giving the sort of quality case and stuff like that, and the investing case again on these stocks. And you know, 3, 4, how many years of nothing? That money sits there just draining away. Yeah, the market's forward looking. You know, you don't get paid for the rearview mirror. Once the results post, they're in the past. You know, you can't go back and trade them again. So the market is always forward looking. You probably, you know, you've got to trade towards the unknown. Once that number's known, it's just, that's it. You know, the market reacts, then it starts looking forward again. It's one of the hardest things to sort of watch playing out, where a stock posts its best numbers, what the stock's traded towards. You might have rode it for 400% towards these results, and then every man and his dogs sees that fantastic number drop, and then, you know, it just becomes a value stock the more it falls, doesn't it? And it just keeps falling. It's hard to watch, but you got to reprogram yourself to sort of, looking forward again. Just get past these financials, leisure goods, audio boom. Yeah, classic case. I've got so many trolls on this. We made some money. It was all right for us. We did all right, and you know it wasn't a huge trend. It was 100% or so available move, and captured that trend, and I moved on. And then yeah, it just, this is what happened. And then off it went again. And then everyone turned up again up here. They was pumping this all the way down. They was saying how good it was. Yeah, you've got to get involved here, where trends go to end, when there's a bid on the table. Yeah, another one of mine. I've still got a position in this, and this was a swing trade. I thought swing entry anyway, and yeah, that one rolled over and died. Still in it, it's nowhere near my stop. But when looking for opportunity, though this doesn't look great now, but what it looked like, that's what we want to look. Just ignore that last bit. We want to be looking for this kind of. This is what we want to be looking for going forward. Stocks what have just been pulled back into bigger levels. With the market rug pull. The Admiral Group as well was another one that went through the screens as well. It's still in profit, isn't it? But they're all getting whacked, aren't they, at the moment? Nothing escapes when you get a real liquidation event. I'm not in the process of predicting that everything what happens in the market, what we know, known unknowns, is going to be an event like this. As I wasn't with the pandemic, but you step up and you execute the plan, the most important plan. Just fly through these. AstraZeneca all wide and loose again, isn't it? A little bit more. It's a horrible stock, that one. Okay for a long termer. Same with Glaxo. You'd never be a trend follower of a stock like this, but as a compounder. Yeah, this one's a loss-making whatever. Shouldn't even have a line on it. Right, precious metals. So as you can see, a lot of these have been running for a long time. There's only so many you can hold, and obviously we were in earlier precious metal stocks. So this is your poster child, especially for the longer term investors out there. Beating out a base. It's a volatile business. See this is the 10-month or very similar to virtually the 200-day. When it breaks out of here, the 200 days now rising. The shorter term and the long term. It's not magic, this. moving averages measure trend. They're not buy and sell triggers for me. They just measure trend. So pulling back into what I call mean trend, the faster moving average of the two here, the base retest. This is the zone of interest for. There's a few things to just check off here. You know, as soon as you've got an idea, say, have I already missed it? Well, with Fresnillo, no, you hadn't missed it. You know, it's just been, it might be 100 and whatever % off the lows, but still, you know, you hear that along a lot. You know, it's 100 odd % off the lows. You know, and then they go through the investment case and go, I should have bought it 100. Yeah, it doesn't work like that, does it? What you've got to sort of recognize is that, you know, this is the low, new low, new low, higher low. Takes that low out of the game, higher low. So you've got a higher low. You've got a big line in the sand here. And you can basically just draw this line in the sand here. You can go higher low. Let's take this one out of the mix because that's not really important, that level. And you can go active low, higher high. 52-week highs, that is a trend reversal. This is the ambush zone. This is a zone of interest for a pullback buyer. This is the zone of interest for a breakout buyer. You can use the William O'Neill 5% rule, but that's all fair game. Fair game all the way down to this sort of mean trend area here especially. That is all fair game for the longer term trend. Now, you know, what happens if this rolls over and just basically stops you out? It's going to happen. It's going to, well, you know, my sort of, if I was still, you know, basically trading longer term in funds and stuff, the way I always did it is I only added to what was working and never added to anything what I got a cheaper price than my initial entry. And you'd be amazed how that just weeds out all those losses. It skews everything in your favor. What most investors do is they add to what's not working and get a lower price. Thus, they're heavier in what's not working. What is working, they don't add to. So they've got, you know, a lower weighting in what's working. And then what happens is when the market turns to absolute, you know, meltdown, they sell those winners to pay for those losers, but they stick there, they dig in with those losers. It's the exact opposite. What, you know, it's very simple maths, this, you know, a 5-year-old could work it out for you. You know, if you only add to things what are rising, you weighted in things what are rising. If they roll over and go lower, you've got to have an exit, obviously, if you're doing that. If you're adding to what's working, you've got to have an exit. But everyone has an exit. Everyone has an exit. It's just that, you know, the trader knows what their exit is. The investor probably doesn't. You know, you've got to have an exit if you're trading stocks. Otherwise, it's zero. Send the hate mail to Edward Treetop. AIM cash machine. So yeah, you know, this is the contrarian. This is where people who want to get in early are getting in early. They're not trying to time the bottom here. Think Stan Weinstein. Think William O'Neill. Think anyone who trades any kind of trend style. Anyone who buys pullbacks. You know, this is the switch. 52-week highs that as well. So yeah, that's a normal. We'll put, you know, if these precious metals are gonna reverse, we will see them in the screens over the coming week, won't we? I'll just show you again. You know, this is the breakout. This is the pullback. You know, doesn't mean it's going to be a winner, but sometimes you don't get the pullback. You know, this is the breakout. You didn't get the pullback. But from where it started to beat out the low, notice 52-week highs again here. Basing out here, we drew a line. This is the breakout, and this is the pullback. Hard to draw that. And it's just an area, and then you get another breakout. What doesn't have a pullback? You know, this is, you've got to be able to see the forest for the trees. You know, zoom out. You will see the entry if you zoom out the chart. You won't see the entry in any financial ratio. If they're going higher for fundamental reasons, they all have to pass go. PAF. So, you know, skin in the game again. I haven't got skin in the game from the earlier entry. Reason being, I just had so much gold on the table and not enough cash. But, you know, I bought this pullback somewhere around here, somewhere in here. SRB, yeah, I mean, we called these laggards because we were in stocks, gold stocks earlier, and we called these laggards at the time, but they turned out, you know, the same again. We didn't have any cash to put in them because we were into other stocks, but some of you did. And yeah, this is the breakout and this is the pullback. I mean, it shouldn't be that difficult. It's not, is it? What about this? Well, this isn't really the entry, though it might still throw a swing point and we'll see it on the journey. This was the last one we gave as a low risk area, and this was the higher high. So we don't want to get too bent up on reasons to get in. You know, I don't want to invent reasons to get in second or third or fourth pullbacks, because I should be in on the first breakout or the first pullback, or the, you know, from a stage base being key. You know, this was a stage base, first breakout, first pullback, higher high, add point. REITs, just fly through these. We're near the end of this list. Right move. See it again, you know, beating out this base for 2 years, gapped up huge. This was the pullback. You didn't get a breakout entry. It just gapped up. Could have been a pro gap. It you know, still might, you know, you might look back in the future and it still might look like a pro gap. You know, you might go, well, it was a pro gap. Look, it didn't close the gap, but it's closed all the way down to the base level. So, but yeah, this was the pullback area. Started on its journey. It's just come into a normal area here, though it's what we call the scenic route. But yeah, it's a strong stock. It's what's it trading towards? How much gas has it got in the tank for the forward journey? Not what we see in the past. How much gas is in the tank for the forward journey? Well, turnover year on year, it's got 9%. That's pedestrian. Pre-tax profit 14, and earnings per share year on year is 90% forecast. ROE is huge. You might have to double check that figure, but debt free. Yeah, you know, structurally, we'll draw a new line on this thing. Line. We'll draw a new line structurally. You know, this is a pretty choppy stock. I'm more interested in the earlier trend. This has always been a choppy stock, I will add. I did trade it a little bit back in sort of 2010 and 11, but not much. I probably traded it in 2012, 13 as well, pretty sure. But it's a pretty choppy stock. if it's trading towards some good growth, price action should kind of be less choppy and start to sort of sort itself out on stocks what have got interest in them. Stocks what have got, smart money, institutional interest will start to trade more orderly. Some stocks will always be choppy though, Glaxo being one. Moving on. If I forgot anything to chat about today, someone give me a pointer. But these are every stock what's bullish in the UK market we're looking at today. Primary trend up, even though they've been whacked. The primary trend is still right. You'll see the primary trend is still rising on everything we look at today. By the close today, that will change. But this is going off Friday's close. Doesn't matter what you're trading, I've traded this one before. I think I have anyway. I know I've got a lot of memories from charting it. So, we'll just draw this big line in the sand here again. But it is what it is. It's a sloth. All the way down. It's value stock this, value stock that, all the way down. The forward numbers aren't great on this either. But, if it wants to go on a journey, that could be the start of a new trend, somewhere around here. Yeah, it's not something I would put my money in, but it's not what I'm looking for. It certainly doesn't have the gas in the tank I look for. In fact, the forward numbers are negative. I don't, but obviously it's a REIT, so yeah, no opinion. But structurally, that's the chart you're looking. I'm looking for. Just show you it again on Curry's here, because it's hard to sort of even be interested in a retail stock, isn't it? But I just want to go back to, see this gap here. That's where something changed. So you've got to go, where's the low? Here's the low. Where's the left shoulder of the low? It's here. You could have drawn this one here as well. It's just not defined whatsoever. But look where the first retrace comes into. This area here. Actually trades the price action of the base. That little area there. 52-week highs was way above. So this level here and this pullback to the level was cleaner. But yeah, you get that big gap up, put it on a watch list. Just put if it's a stock you want to own, just put the ambush zone in. Not the kind of stock I'd be interested in, obviously. Choppy, awful action. And same with Next, it's trading awful action, isn't it? This was see this washout move down here. Left shoulder, right shoulder. It was just all over, wasn't it, this one? 52-week highs. You could have bought anywhere in this area here for a longer term sort of investor time frame. Yeah, there was nice little pullbacks off all-time highs for swing traders as well. The swing traders, zoom in on that. New high, first pullback. You got a swing point actually on this day here. And it kind of bounced and rolled over deeper before going up to a swing move. Came back in again. You get another swing sort of signal on this day here. Went lower again before going up on its journey. This one was a bit cleaner, but it was hard to sort of, that's my sort of swing point. Fires off on this day here, and it did the same again, bounced lower, went into mean trend before going higher, but it just gapped up on news into it. But you know, that's my sort of active game. It's not going to be swing trading is sporadic. You know, it's they all go together, and you can only take so many, and then it's sporadic. You know, good ones go through results, and then they drift into the area, and then the market does a pullback, and then there's a wave of them go again. That the best structurally sort of leading stocks, and then it's sporadic again, and you have to sort of turn down the gas. You know, once the market's gone, you know, we call it once the swing has swung. But the money is always going to be made in buying and holding a big trending stock, period. You know, it's where William O'Neill made all his money. It's, you know, the old 80-20 rule, isn't it? CNC, structurally it's hanging in there, you know, skin in the game on this one. It's in a normal area. It's coming towards results as well. But yeah, you know, I won't curse it. Filtronic, yeah, you know, I'll just say it again. It's hard to watch people chasing these, you know, chasing the fundamental posters out there who are telling you how good this stock is. You know, this is where the low risk breakout entries were. This one here, you know, it still went sideways. Call this a zone of interest. Just go articles, or just go to my Twitter account, or you know, they're all in there. They're all linked to on my Twitter account as well. But yeah, the zone of interest, you know, it just builds another base, and you get like a little base cheat and a breakout. These are the lower risk areas. 52-week highs is here, you know. It's really hard watching people saying that 52-week lows is where you're buying value. This is 52-week lows here. That's what happened. This was 52-week highs. It did this. That was manageable. You know, it would have been a scratch trade. I hate this stock. You know, it's one what has just been. You know, obviously it's gone on a good trending run recently, and I'm not in it. But it's just one I wish they'd delist. It's always been there, and it's always been promised. It always hits my screens. That's the problem. And it's like the boy who cried wolf. You know, it did go on a great move. It went through our. It can't not go through our screens, you know. And it did go on a great move for those who took it. I'm not bitter, just a little bit. But yeah, you know, I'm back to the simple stuff. If it can't trade a 52-week high, it's not going up. Period. It's not going. It's not going to be a big winner if it can't trade a 52-week high. Period. MWE. Yeah, you know, this one's basically, it might be still in the game for some people. I was a bit later to this one, so I took a position here on this one, and I trailed a half stop on it just for heat reasons. So it stopped me out for a scratch trade. Less than half. Well, I had a half stop on it, so. But yeah, it's structurally it's still there, isn't it? But you know, went on a little move. It's not what I call a GTRS stock, but it could have taken part. We call it a CTP, a calculated total punt. Trademark Sean. I think it was Sean who trademarked that one. But yeah, it's just, you know, it didn't have the gas in the tank I trade towards, but it was a good setup, and it went on. You know, it could have survived if the market hadn't had the rug pull. And this one here as well, is, you know, it was a bit thin for me actually at the time. I didn't have the cash anyway. I was fully invested, but Nice and orderly, wasn't it? But let's just do it again. Keep it simple. It's not 52-week highs this time, but it beat out this low, gap down, moved back up. It respected this level here, 6-month highs. It broke out, first pullback, off it went on its journey. So if you're a long-term investor, this is buying before the markup, isn't it? It's got to be the high with no supply. It's got a bit of supply still, obviously, but and then this was so we had a breakout and pullback. Some people call that a failed breakout. It depends what your time frame is, I suppose. If your time frame's just days, I suppose it is. But if your time frame's riding a trend, that's just a normal dip back into the base. You got another opportunity here on this pullback here to mean trend as well, to buy a pullback in it. It shouldn't go back below here. Through a swing point there, that would be dead today if you was tight on that. I don't have a position in this stock. And Imperial Brands as well. They move as a pack, don't they, these two? So active low. Kind of put a higher high in here and then rolled over again. Higher low. Higher high. Breakout, first pullback. That is the switch. That is the and this switch is temperamental, but that is the switch. It's really, really basic Dow theory. Sometimes you get an electric shock off it. Yeah, I mean, this one hasn't really. Well, it's got a bit of gas in the tank, hasn't it? I hate anything with airlines in the mix, but it's got some pretty good growth. It is decelerating from the last posted numbers. I mean, the last posted numbers were, it's got big comparative numbers to sort of beat, hasn't it? So it is decelerating now, but still. Moving on. There's only a couple left now. If anyone's got anything they want to look at, I don't know what's in the bottom of here. All kinds of weird things. Let's jump back onto the. So I'll be honest, it'd be better if the S&P doesn't close the gap before it opens. It could do with doing it in the cash session rather than the out of hours. But it's going to be an interesting one to watch, isn't it? We'll just go back to the gold price. Yeah, I mean, gold made a huge move. Some back and fill is very normal. Just build an area. That would be a very normal area for gold to just melt into. Just note this big round number on gold here as well. This 3,000 area. And yeah, existing above there, I think gold small, gold stocks will stay lively, especially those small caps. If it can exist above those levels, that would just be happy days for the gold miners. Oil, we've called it for how long now? We've been teetering on this ledge forever and a day. Short term, when oil just gets crushed down. You know, the market's going with it. Longer term, this is the fastest injection of, you know, money into everyone's pockets. Cheaper oil. So this is a good thing. For me, a meltdown into, we've been talking about it forever and a day, haven't we? You know, if it could just get down into this area here, you know, that it's just going to be, it's just going to set the market up for everyone. And going forward, just a little back test. Let's put the voodoo average in there. That's the 50. Yeah, just a back to new lows, back test into the range, and over it went. Yeah, but this, yeah, but that, you know, let's just deal with the price action. This was a fantastic one back in sort of 2013. A guy called Oscar Carboni, Carbroni or something like that. He you'll find him out there. He's a futures trader. He called the he not only did he call the big break in the oil market, he actually put a price target in there, and I'm sure you can find it somewhere. And they had him on CNBC, and they interviewed him, or whatever channel it was, Fox News or whatever, and they were basically laughing at him as he was giving his prices, and he puts some long-term sort of predictions in the market for, he'll do Bitcoin and all sorts on a yearly basis, even though he's a day trader. And he had to remind them, and they got him back on, and he absolutely nailed it. He absolutely nailed it. And he gave them a bump and said, hey, you know, kind of ridiculed me for my market call, and it's all there, all time stamped and everything. He put the levels in and the lot. It's yeah, quite funny. So yeah, let's say 4,000 on oil. Right. What else have we got? Let's jump into. I'm delayed on this Bitcoin. Hang on a minute. Obviously, I'm delayed on this thing. More efficient. It's a more efficient product now. We'll just go back to the basics again, as we did all the way along in active low, higher low, higher low, still a higher low, higher high. This is the breakout. This is the pullback. This is the add point. Very hard to trade Bitcoin back then, though. Though a lot of my group were involved. Let's do it again. We got this little sort of active low, higher high here, but it was a little bit too short term. It needed more time to set up. Look how far it was below 6-month highs, 52-week highs. But then we came back to it. We went, well, basically we got, zooms out, finds it again. So basically we got active low, higher low, and there was a big level up here, but this spike down here made this a really obvious, you know, this is the left shoulder of this low. So it moved up. This was the breakout. This was the pullback. This was the higher high. Off it went on its journey. We do it again. Go back to Bitcoin. We put the zone in the market. Sharescope tutorials, timestamp. Nobody cares. Nobody was there to see all these charts we did anyway. Yeah, it comes off the lows. we get an active low, we get a high low. We had an active low down here, and we had a line in the sand here as well, and a higher high. But it was just a little bit early again. It wasn't that defined. You could have bought this pullback to it here or this breakout here. It was all fair game, wasn't it? But it built this better level here. Active low, higher low, higher. Nice defined base. Breakout. First pullback was later. Still made a good move. More efficient product. You see the percent moves are getting less and less as this thing. This is a log scale, so you know you can see the big run on the earlier trends. They get less and less, don't they, before they base out again. Basically, the way it works. More efficient, less efficient, higher growth. Walks to the beat of its own drum. Starts to get chopped around. They list an ETF. The top's put in. You rinse and repeat. And let's just have a look at TLT. This is not an issue anymore, is it? It doesn't matter. The market is basically going to sort out any inflation worries, I would think. Anyway, it looks like it is. Moving on. So I will leave it there. We covered a lot there, but basically, in my world, turn up every day. It's going to be interesting to watch the US. We're just, nothing to do until we see the US open, and it's going to be just interesting to see, is the low in today? It's a big reaction, isn't it? It's had a big reaction, so it wouldn't surprise me, but it doesn't matter either. I just turn up every day and I wait for those stocks to hit the screens. Those simple areas. If you can't see it on a weekly chart, it's probably not there on a daily chart. It's probably, you're going to be better if you can see it on a weekly chart. You can see what you're buying. Are you buying the beginning of a potential new trend? Or you're jumping on the tail end of a trend that's been running for some time? Just, have a checklist. Look left. Has it posted fantastic numbers? Is there any chance in the slightest that it could ever beat those fantastic numbers going forward? Sometimes stocks get cheaper as Nvidia. It never feels good. I know those at my site have just sold out of Nvidia. It never feels good, but they were in down here. So, active low. See this one here, you got a line in the sand here, but it went reverse vol on us, as we call it. No breakout, active low, higher low. It will happen. It will happen. Breakout. No first pull. Well, there actually was a tiny little first pullback here. It broke out and it just went, didn't it? There was no. This is where investors. This is where investors should be getting. This is where investors were saying how overvalued it was, and here they were just saying, yeah, this thing's so overvalued, and it actually got cheaper. It got cheaper as it gapped higher because the growth was just huge, and it executed. Sometimes it's sometimes it gets whacked, and you just take your paper cut. Having 50%, 60% cushion is a good place to be, isn't it? But yeah, what will happen is, these stocks will go into, yeah, I think it's value now, and then they're in a downtrend. The best growth does not trade at value. Keep it simple. Okay, cheers all. We'll see what the US Open brings. I would advise everyone to get a little bit of sunshine into the day. That's my tip. Hope you got something from this.